Why is Mullen stock up 8.42% today? Make sure to like and subscribe to keep up with all of Drive EV Miles' latest videos. For the technicals of Mullen Automotive. Looking at the 15-minute chart. In the last 2 days, the price has risen 50%. If Mullen can break above 30 cents, could result in some strong upward movement, likely reaching new local highs. Today Mullen did over 208 million in volume and was able to carry the max cost to borrow all the way to an astonishing 1010% per Ortex data, kicking many short sellers out of their positions. The short interest has been falling over the past few days, down to 12.37% due to the intensely high borrowing cost. Defying bearish expectations once again, electric vehicle manufacturer Mullen Automotive, Nasdaq ticker symbol MULN, managed to generate a strong start to its final stock trading session of 2022. As was the case yesterday, the focus among market participants centered on the company's short borrow fee rates. With MULN stock becoming more expensive to short, many retail traders see this dynamic as a potential catalyst for a short squeeze. According to the latest data from Fintel, the short borrow fee jumped to 313.76%. At the start of the prior December 29th session, this stat pinged at 156.76%, eventually skyrocketing to a stunning 281.79%. To quickly recap, borrow fees refer to a type of secured loan which bearish traders pay to initiate their shorting activities. What attracted contrarian investors to MULN stock is the typical range of borrow fees, both for non-shorted securities as well as ones that bearish traders target. Per Finance Train, the typical fee for a stock loan is 0.3% per. However, this expense can jump to 20% to 30% for heavily shorted stocks. Obviously, MULN features a cost to borrow more than 10 times standard expectations. To be sure, MULN stock responded very well to Mullen stockholders pushing for a short squeeze. At the time of writing, MULN gained nearly 6% after starting the morning's trading session, up 5%. In the trailing 5 sessions, the EV maker returned stakeholders more than 27% of equity value. Still, the enterprise remains deeply embattled for the year. MULN stock is more than just a single stat. Compounding the ambiguous nature of MULN stock, near-term excitement versus longer-term risks, is that professional traders typically use short borrow fees as a potentially viable indicator. Essentially, it's a cat-and-mouse game. As pressures build for short traders, the idea centers on one of them blinking. If so, the subsequent covering action could cascade to possibly exceptional upside for the target security. As the street mentioned, S3 Partners analyst Ira Dusanowski utilizes costs to borrow to extract valuable information. An increase in stock borrow rates may force some short sellers into closing their positions, getting out to realize their remaining mark-to-market profits and exiting before other buy-to-covers drive the stock price up, Dusanowski stated. Certainly, rising fees contributed to short-term spikes in other bearishly targeted stocks. However, it's important to realize that not one stat guarantees a particular outcome. Otherwise, one would only need to wait for certain metrics to flash. In other words, everyone would do it. At the most basic level, rising borrowing fees for MULN stock indicate increased demand to short the underlying company. Stated differently, a possible bullish outcome represents downwind speculation about human emotional reactions to the primary data point. Whether short traders take the bait as a secondary action is not always predictable or reliable. Finally, it's worth noting that when MULN stock bounced dramatically higher around mid-December following Mullen's disclosure of a $200 million order, shares eventually cratered prior to the recent short squeeze speculation. Thus, the bears themselves carry confidence that MULN will move in the direction they ultimately seek. We would like to thank you for sticking around until the end. We would like to know how you feel about Mullen Automotive. Let us know down below in the comment section.